Hello, 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 everybody. It is Kaylani here, aka Kay, CEO of K Levels. Today is December 1st, and I am just here to make a video because I wanted to answer some questions for my team and clear some things up for them. So, let me pull up the questions. Give me a minute. Okay, let me screenshot these so I can have them. Are these all my questions? Okay. Alrighty, so let me get started. I got all my questions. Okay, so right now the chart that I'm looking at is Euro USD. It's a clean chart. I'm looking at it on the daily time frame. One of the questions that I did have and lots of people were asking is what is the difference from the minute, the 5 minute, 15, the 30, the hour, the 4 hour, the daily, the weekly. Alrighty. So I analyze the market. I'm a swing trader. So as a swing trader, I like to leave my trades in for a long period of time. It's less stressful for me. I don't have to be on my charts as often. So I do like to swing trade. So with swing trading, the first thing that I do is usually look on the higher time frame. And the higher time frame consists of the 4 hour time frame, the daily, or the weekly. So just to give you all a breakdown of what these are, the different time frames explain the amount of time that each candle takes to complete. So I'm going to drop down to the 5 minute chart. So the 5 minute chart, for example, this, let me zoom in. Actually, I'm not going to zoom in. I want to show you all structures for a second. I got to do it on the 30. Okay, so for example, each of these, this is the 30-minute time frame. So on the 30-minute time frame, each of these candles, so this candle 1, 2, this candle 3, every single candle here, every candle here takes 30 minutes to form. So this candle will close in 30 minutes and then a candle will close in 30 minutes. Hopefully that makes sense. But if you look at the bottom of my screen here, it says this candle started at 5 a.m., which means that it will end at 5:30 and the new candle will start. This candle started at 5:30. It takes 30 minutes to form, and the next candle will open, the 6 o'clock candle. So the other time frame, so I'm going to drop down to the lower time frame. So the 5 minute time frame is 5 minutes. Each candle is 5 minutes long. So 5 of the 5 minute candles will equal a 30-minute candle. Oh, 6, I'm sorry, 6 of them. So 6 of the 5 minute candles will equal one 30-minute candle, y'all. I hope that makes sense, but if I were to have 6 of these candles, so the last 6, it was 1, 2, 3, 4, 5, 6. These last 6 candles here, I'll zoom in for you. These last 6 candles here equals 1 candle on the 30-minute. So if you look on the 30-minute candle, the 30-minute time frame, it's only going to show 1 candle for each 6 of these 5-minute candles, if that makes sense. So on the 30-minute, this is what you see, and on the 5-minute, this is what you see. It's all the same structure. For example, you see this nice drop on the 5-minute. These were all 5-minute candles, so you're going to see more candles. On the 30-minute, you're going to see a drop as well, but you won't see as much candles because it's only 1 candle every 30 minutes. Here's the same drop. And also here, this little pullback, it's not, you only see about 6 candles. The pullback on the 5-minute will be much longer because it's 5 minutes for each candle. And here's that pullback. If you see, this has all the extra noise. That's why I don't use the lower time frames, because I don't like to see all the extra candles. I like to do the higher time frame so that I don't get distracted. So I'm going to go back to the 30-minute again just to show you. This is the 5-minute. You see all these candles? 6 of these candles equals one 30-minute candle. There you go. Does that all make sense to you all? Hopefully. I'm just going to highlight this so I can actually show you what it looks like on the 5-minute. Oh, sorry, wrong time frame. And this is the 5-minute. You see that one little area on the 30-minute was all of this on the 5. If I were to show you this on the 1-minute, that means each candle is 1 minute long. So that means there are going to be a lot more candles. You see that? Okay, so next question. Oh, I don't like the 1 minute, sorry. I trade off the higher time frames. Okay, so a reason why I trade off of the higher time frames and not the lower time frames is because on the higher time frames you can actually see structure, meaning you can actually see the way that the market is going rather than on a lower time frame. For example, this on the daily, you can see that it's a downtrend. You see that there was a trend that formed here. If you were to go down on to a lower time frame, you will not see the same trend. Do you see how the trend looks completely different? And you see where I marked my lineup? This was all in that one trend. This is the 15-minute, and I'm going to go back to the daily. So each of these candles are 15 minutes long. Each of these candles are a day long. They take a day to close. Alrighty, let's go to the next question. Okay, so bullish and bearish. So when the market is bullish, that means that it is in an uptrend, which means that it is a buy. So you will hear often Euro USD is bullish. That means it's on an uptrend. Euro USD is bearish, which means it's on a downtrend. The reason that I can remember the difference between the bullish and the bearish is that bullish starts with BU and buy starts with BU as well. So I can always remember that bullish means up. It's an uptrend because a buy is up. And bearish is down. So if the trend is bearish, that means you are selling. If the trend is bullish, that means you are buying. Okay. Okay, so how do you know when the market is overbought or oversold? And what are signs that it's being overbought or oversold? So this is where your support and resistance zones come into action. The only way you're going to know if the market is overbought or oversold is based off of support and resistance zone. I can't quite tell you what type of trader that you're going to be, but I can only tell you what I do and what I know. I'm a swing trader, so I look on the higher time frame. So I would start by marking up my charts on the daily time frame. This isn't the best example, but I would start marking my charts up on the daily time frame. I'm going to remove all of this stuff. Hopefully you all screenshotted it, all these drawings. So like I said, I mark up my charts on the higher time frame. So to find my support and resistance zones, I pretty much just, I'm going to pull up Smart Trader. I'm sorry. I don't use Smart Trader, but I know it's kind of hard to point out zones when you're first learning. Very hard for a lot of people. Like zones is one of the hardest thing for support and resistance zones, one of the hardest thing for a lot of people to point out. So last time I went over a session with you all, I wasn't able to pull up Smart Trader, but it works today. So the way that you'll be able to get your support and resistance zones is by typing in smarttrader.com, pulling up your chart. I'm looking at Euro USD, and right here, I think it's here. No, it's not. ABCD, right here. ABCD, you're going to see smart support, and click it again, and smart resistance. So right here, it'll give you your support and your resistance. So this is on the 1 hour time frame, and I'll just look on my trading view, go to the 1 hour time frame, whichever time frame that you trade. I trade the 4 hours, so actually I'm going to change this to 4 hours because I like the higher time frames. So a lot of people have difficulty marking up their chart and finding support and resistance. So this website does it for you. So I would use this as a first little area of support or resistance. So I can't quite see that number, but it's around 1.1400. Oh, duh. I just said that. Okay, perfect. And then I have an area. I don't like to do lines because support and resistance areas are zones. They're not necessarily lines because wicks take over that. So it'd just be this little zone. I would still draw a line there. Oops, sorry. I would still draw a line there. Get it back to where it was. Just to help you all out. And you could use it. You could just draw a zone in between this line so that you can get your nice little zone. Okay. And then we have a little area of support here. So the way that you are finding your support and resistance zones is the amount of times that it's been touched. Oh, I didn't even look at that number there. What is this number? 1.12661. 1.12661. 1.12661. Alright, so it's down here. I knew it was because I'm like, that doesn't make sense. Okay, so this is a nice little zone here. These are nice zones because of all these wick touches. The more touches that you have on a line, the better. The more wick touches, you guys, wicks. Here's a little wick touch here. A nice wick touch here. And then for your nice wick touching here. You've got all these wicks touching here, which is nice. You've got all these wick touching here. So yeah, this is a nice little area. So these are your support and resistance zones. So this is how you're going to be able to tell if the market is overbought or oversold. You must first draw your support and resistance line. So if the market is at the top here, that means it is overbought based off of your support and resistance lines. This is an overbought area, overbought territory. Overbought territory. And below here is oversold territory. And also, you guys, I'm telling you, I learned all of this from watching IML TV. The more that you watch IML TV, the more that you learn, because you learn something new every time. Any educator that you tune into, you're always going to learn something that you're going to click with. So this is overbought and oversold based off of your support and resistance zones. As you can see previously, it did break the zones. The zone was broken. So I'm no teacher here. I just use IML, so bear with me. Okay, so this is an overbought territory, which means that it's been overbought and a sale can possibly occur. And this is where the retest of structure comes in. I know there was a question about retesting. Okay, so you see prices here now, and it's going to this oversold territory. So when price actually gets down, to this area, you're going to be looking for a buy, correct? So what you're waiting for, and this is why you become a professional wader rather than a professional trader, because there will be traders that once they see price gets down here, they'll automatically buy into the market and think that it's going up, but the market could definitely decide to just break this area and start and continue its downtrend rather than going up here. And this is why you must always wait for a retest. So what a retest is what a retest gives you confirmation on which way the market is actually going. So if the market, for example, I'm going to move this over a little. So now this is your overbought territory and you see prices down here. So now that you see prices down here, this is when you start to watch it. When it's floating in the middle, you're not buying or selling anything because you don't know which way it can go. The market can decide to randomly just shoot back on up here and drop again to this oversold area, or the market can continue down. So like I was saying, the way that you know the retest is a confirmation that lets you know where the market is going. So what a retest is the break of structure and retest. So what breaking of structure is the break of this zone. Once the market has actually passed this zone, some people would get into a sell immediately and say, okay, it broke the zone, which means it's going for a sell. But no, that's not the correct way to look at it. You have to wait for a retest. And the retest is pretty much the pullback that's going to retest this area, meaning that another candle is going to form and stop exactly at this spot. And that means it doesn't want to go back up and it wants to drop. The market works in and moves in structures, you guys. Let me show you. Actually, let me put my magnet on. So yes, this is how the market moves. This is evidently a downtrend, and this is an uptrend. I'm such a perfectionist, sorry. Okay, so yes, this is going up, so this is bullish, and then the market decides to break structure, and this is bearish. So when I said the market broke structure, this is why it's so important to always draw support resistance zones and trend lines. Very, very important. Okay, I'm sorry, I kind of went off track. But anyways, the market works in structures. The market always makes an impulse, which is the push, and then it always retrace, which is the flag. Push, retrace, push. And then it reverses and starts a downtrend. The market doesn't always just continue to go up and doesn't always continue to go down. So this would be your retest right here. And I can show you on the market actually like a nice little retest candle to show you what is actually going on. And then also here's another retest. So the way that you know that the structure, that's going to be difficult to talk about. Hold on, I'm sorry. I gotta find a nice area. Okay, so I'm actually going to delete this. Hopefully you all screenshot it. I'm going to delete this so that I can show you what a full retest actually looks like. So anyways, yes, so for you to get your support and resistance zones, you could definitely just use Smart Trader, and plot it on TradingView so that you can get these zones. Okay, so the market comes down here and you automatically assume that it's going to buy because it is in an oversold territory, but you have to wait for that retest. So you're either waiting to see if it's going to break structure, retest here and drop, or you're going to wait to see if it is going to go back up. And the way, so if the market comes here, what you're waiting to see is if it breaks this area here. This last low here, you want the market to pass that. And once a candle closes above this area, then you're good to get in for the buy. Because the market will fake a lot of people out and people will think that, oh, it's going up even if it's right here, and ends up just dropping on you. And that's why you always have to wait for a retest, because once it breaks structure, it's going to come back up here to retest and then drop and make its full, complete, long-term drop. Just like that. And what you're waiting for it to reverse is for it to break the last area over here. All right, next question. When a lot of participants in the market is just when it's just moving super fast, I don't really know. I would assume that the market is just moving fast. That's how you know, because it's moving fast because people are in the market buying and selling. Let's see. How do you know when it's the best time to open and close out a trade? So I pretty much showed you how you would enter a trade. You have to wait for the retest. And the way you know to close it, I always, like I said before, I trail my stop loss. I just will constantly trail my stop loss until either the market reverses and hits my stop loss because I trailed it, or I just close out when I feel I am at a good point. So you can either, I gotta go to clear my chart now, you guys. Okay, so the way that you, hold on. So yeah, you guys, like I said, I trail my stop losses. I said this in the last meeting because setting up a TP is fine. I like to set TPs, but the way you would set your TP is from zone to zone. So that's how you would set your TP pretty much. So the market comes down here and you're looking to buy it, okay? Because now it's been oversold and now it wants to come back up. So you get in for the buy and your TP would be the next zone, which would be here. So this would be your take profit. Your take profit would be set at this zone. But like I told you, I like to trail my stop losses because what if the market wants to create a new high and pass this zone? If my TP was set, it would have already taken me out when I could have gotten the rest of these. So that's why I trail my stop loss. I'm actually going to put my TP as this green line here because it shows money. We get in cash. So this is going to be your TP. This is what you would just set it just in case you don't have time to trail your stop losses. You'll be satisfied that you still made money. But I like to trail my stop losses. So if I see that the market is up here, I didn't set my TP, but I'm telling you this is up to preference. So say the market is here and it gets up here. I'm like, okay, this is an area a major area where it could possibly reverse and shoot back down. So I'm watching it and I have my stop loss trailed. So I would have my stop loss. I'm going to change it to red for stop. I would have my stop loss here. I would have my stop loss here. That way, if the market does decide, you know, it's reversing and it comes back down, it would have taken me out right there at this point. But that is still really good because I got all of these pips, 117 pips, if that makes sense. So you can trail your stop loss or you can set an exact TP. But say the market didn't reverse and it decided to just continue going up, and I didn't have a stop loss set. I mean, if I didn't have a take profit set, I would keep trailing my stop loss. So the further that this line, this market keeps pushing up, I will keep moving my stop loss the further that it goes up. Every time it goes up a little bit, I'll move my stop loss. That way, when it does decide to, ooh, let's go back down, it would have taken me out right here. Rather than if I had my TP set down here, I would have got kicked out here a long time ago and wouldn't have been able to make these extra 130 pips. But the a time when I definitely set my stop on my take profit is if I really I know I'm going to be out a lot and I don't have time to look. So I'll have a take profit set so that if I don't have time to keep moving my stop losses throughout the day, it is set. And if my take profit is hit, then it's hit and I made money. You're still satisfied with what you made. The whole point is not to be greedy, because once you start getting greedy, you end up losing because you're going for so much that it ends up reversing on you. So if you do have your stop loss, your take profit set, it will take you out right here and you made your profit for the day. If you decide to trail your stop loss, just do not forget to trail it, because if your stop loss is still way down here, then if the market decides, if the market ended up going all the way up here and you didn't secure any of your profits, meaning that you didn't put a stop loss into your profit, the market can go all the way back down here real quick and your stop loss got hit and you made no money. So just trail your stop loss throughout the day or set a TP. And the reason why there's multiple TPs is because of the trailing stop loss. That's what it is. So if you have TP1 here, TP1, you have TP1 here, you have TP2 here. So you've got TP2 here, and just say TP3 just because. TP3 here. Then what these are just markers for you to trail your stop loss. You don't actually put in 3 different TPs. You're just trailing it. So some people aren't quite risky. They'll be like, I'll just go for the first TP because I don't want to be greedy, just in case I decide to go for the second TP and it doesn't even hit that TP. For example, some people put in TP1. They made their money off of that first TP. Some people don't even put in TP1 and they go straight for TP2, but say the market only came up here and reversed on them, their TP was never hit and they ended up losing, which is why it's super, super important, you guys, to always trail your stop loss. Once you see that you're in profits a good amount, put your stop loss in here, like here, because even if it didn't hit his second TP and it reversed on him while he was sleeping and didn't see, he still moved his I'm going to put an entry down here so that you guys can know this is where you all entered at. So for example, say you entered here. So yeah, this orange line would be your entry. Okay, so yeah, always trail your stop loss, because he went for TP2 and it never hit TP2. and the market reversed while he was sleeping, if his stop loss is in profit, which it is, then he didn't lose any money. He didn't gain as much as he wanted to, but he didn't lose any. If he didn't move his stop loss and it was here, he lost money. So just trail your stop loss or set your TPs. And then second, somebody could have probably wanted to go to the third TP because they feel that's where they think the market's going to go, that high. So they have it set for this third one. And if it hits, that's awesome. But say it doesn't hit and it ends up doing the same thing and going up to here and dropping. Going up to this level and dropping. So if say I was going for TP2 and you were going for TP3, I already hit take profit, but yours never hit take profit and ended up reversing. So remember, move your stop losses into profit. If your stop loss was way down here, you ended up catching all these pips and all this money while you were sleeping, but then while you were sleeping, the market decided to just shift and turn back around, and you didn't secure your profits. Like, you don't have to wait for the market to hit your TP before you take your profit. You could say, oh, I feel like the market is, I've made enough money, let me take my profit, instead of being greedy and trying to hit your TP. Like, there's a lot of situations where people are like, oh no, there's only about 20 more pips till my TP is hit, so I'll just stay and wait for those 20 pips to get hit, and it never hits, and the market ends up reversing on them, and they didn't put their stop loss into profit. I would put my stop loss right here, or even at the second TP. So I hope that makes sense. Okay, the next question. And the time frame to trade on is based off of your trading. If you're a short-term trader, you use the shorter time frames. If you like to scalp, you use the lower time frames. If you like to swing trade, you use the high time frames like I do. How is the harmonic scanner linked to MT4? I don't have mine linked to MT4. I have my harmonic scanner on imlharmonicscanner.com. For some reason, mine isn't working. I emailed them. I don't know why. But your harmonic scanner is on imlharmonicscanner.com. You log in. Mine just keeps saying wrong password. I have no idea why. So you would just log in, and that's your harmonic scanner there. It's not like linked to MT4 at all. I mean, you can link it to your MT4, not your MT4 on the app, but the MT4 on your computer. You can link it to that, but that it's like 10 times worse. I would rather use it on the browser. Is Trader's Way your broker? Yeah, Trader's Way is your broker. And why is MT4 asking my broker to contact them? I have no idea why your MetaTrader 4 is asking to have your broker contact them. Yeah, I don't know. That your MT4 doesn't ask you anything. So I'm not sure if that was worded correctly, or you would have to send me a screenshot of what you're talking about. And what do you press to make your lines on MT4? What lines are you talking about when you say that? I don't understand that part. And okay. And how often you have to check your trades depends on what type of trader you are. If you're a scalper, you're not checking your trades. You're literally staring at the market and getting in and out of trades. If you're a swing trader, they're long-term trades, so I would check it a few hours throughout the week. I mean, throughout the day. Trail your stop losses. Just make sure things are good. I don't know if there's any other questions. What was I gonna show you all? Oh, my computer's dying. Let me plug it in. Uh, I think that is all that I have. Okay, let's see. Oh, okay, I know what I wanted to show you. Where is my... Oh no, that's a... Okay, here's what I want to show you. So with iMarkets Live TV, I'll probably end up sending you all a list of this, but and I would greatly appreciate if, well, I can definitely start it, but I do want to build up all of you guys' leadership skills as well, because as a forex trader, you do have to build your leadership, only because, you know, to grow yourself financially, you need to grow yourself mentally. And by growing yourself mentally, that's by helping others, by, you know, inspiring others, by reading self-development books every day or listening to audiobooks every day that does develop you mentally. So I'm going to start putting reminders in the group to help you all remember who's on IML TV. But if you guys are tuning into somebody that's live, I would greatly appreciate if you could put it in the group also that this person is on IML TV and you're tuning into them. So, Forex Basics here, I definitely recommend you all using this. And the best on here are, in my opinion, a Daisy for sure. Sam and Chance are phenomenal. And Lee Allen, she is awesome. So charting and analysis for beginners. Sam and Chance go over Forex 101 in psychology, and a Daisy Forex 101. And then for the harmonic scanner use, if you need help with that, Farron is phenomenal. Where is he? Here he is, Farron. Tuesdays and Wednesdays, Farron is really, really great with the harmonic scanner strategies. And what else did I have to say? Remove all of these. Okay, so I can give you another example of, let's see. I love using the higher time frame. The higher time frame is just so clear to me. You could see trends so much easier rather than on a lower time frame. And you could see the whole picture of what is going on. Okay, so I try to go for as many wick touches as possible. Like your trend, everyone sees the market differently. So your trend lines are people's trend lines are going to be different than mine. Some people will have a trend line here, but that doesn't look good at all. So I have my trend line here. I have a touch here. Just like your support and resistance, you need at least two touches to have a complete trend line. Nice touch here. Nice touch here. So what the trend line helps you with is to know which way the market is going also. So you see how you have a trend line touch here? It touches the trend line. You have all these nice wicks. That means you know the market is going to drop. Wicks tell a story, you guys. The wicks show you that the market is tired of going in that direction. This wick was a perfect example. Oops. This was a nice exhaustion wick. So what that means is that this candle went all the way up here. This candle went all the way up here, but it got pushed back down by the market makers because it was tired of going up. So it got pushed back down and it closed here. That's a great confirmation that the market wants to go down because it got pushed back down. So when you see wicks, when you see a lot of wicks on a trend line, that means it's going to go in that direction down. All these wicks, this nice exhaustion candle right here, this wick, that means the candle went this far up but then got pushed back down. Then we have a nice touch here. Then we have a nice touch here, and these are indications that the market wants to sell. just by plopping on a trend line. So for example, if the market decides to come back down here and go back up here to this thing, you're going to keep an eye out once the market is on this area. So the way that you would know that the market is back here is you would set an alert on your call level app. So I would have to do another Zoom. I would actually do a Zoom session with you all to show you how to use your call level. So pretty much on your call level app, you're allowed to set alerts for whichever pair you want. And I would send an alert here so that when the market gets to this level, I would get an alert. And that means I got to look at the chart rather than staring at your chart to see when the market makes its way down here just to make its way back up to the trend line. You don't have time to sit there and look. Remember, these candles are a day long. That's going to take a good amount of days for it to hit that point. So I would send an alert there to see when the candle gets to this area. So you get that alert and you're like, okay, ding, 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 the market could possibly go back down because it's at the tip of the trend line. But what you're waiting for confirmation, you want to see a nice wick, and you also want to wait because the market can decide, because you know the market is not predictable. We cannot predict the market. We're just analyzing our market, and based off of our analysis, we are giving our views of which way we think that the market is going based off of our analysis. So like I said, the market comes down here, say, and then it decides to come up to this spot, and you get that alert that says ding, 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 price is at that spot on your trend line that you wanted it to be out. Let's see. And this is what a lot of people get wrong, is that once the price hits that area, they're like, okay, I'm going to get in for the sell now. No, you don't get in for the sell. You wait. You actually drop to a lower time frame. You wait because the market can decide to shoot up. But remember, if the market breaks structure, and what I mean by break structure, it broke the trend line. That means it's no longer a downtrend. It broke structure. It broke this bullish structure here, you guys. That's what I really need to stress. It broke this channel. This little channel that it had here, it broke. You see how price was bouncing back and forth in between this channel? These are your buy and your sell zones, your supply and demand zones. You're buying here. You get down here, you sell. Once it gets to another trend line, the top of the trend line, you sell. Then you buy once it gets to the bottom. So now we're waiting for price to come down to this just for you to buy it again. So price can either do two things here. So yeah, I would actually have two alerts set. I would have an alert set up here, and I would have alert set down here. So because you see how price is, oops, this is wrong. Price is currently at this pink line here. This is where price is at. So the market is closed, so it's not moving. But say the market was actually open and it was moving, I would have an alert set down here so that when the market gets here, I have ding, ding, ding. I got an alert that let me know price is here. So now I want to wait to see if we're going to be buying or if it's going to break this structure. The way that you know that structure is broken is because price decided to break the trend line. And for full confirmation, like I told you, people, once it breaks trend lines, people like to just jump in. They're like, it broke structure, it's going down. But that's not true. The market will humble you real quickly. What you need to wait for is a retest. Because the market can decide, if you don't wait for a retest, meaning that you wait for price to come back up here, the next candle to come back up here and close right at this area so that it can drop. Because if you don't, the market likes to railroad. It's called railroading, and that's when the market decides to break structure here and just end up going back like this. And in that case, this happened here. This was an area of support and resistance. Right, this is the perfect example. This was an area of support and resistance right here. And you see you could buy and sell in these zones. Market's down here, you're gonna buy. Gets up here, you sell. Gets back down here, you buy. So these would be your TPs. You enter here, TP here, market's gonna reverse, then now it's overbought. So now now it's oversold. So now you're buying. Now it's overbought. Now you're selling. So you see when the market gets here, you think that it's time for us to buy. But you see how it decided to just break structure? It broke structure and people are like, oh my gosh, let me sell it. But you sold it and you didn't even wait for the retest. So what the retest would look like is pretty much this. The market will come down and retest, but you see how this one candle, let me zoom in for you all. Okay, so this is perfect. So you get down here and you're like, okay, I think I want to buy it because it's at this area, but you need to wait because the market can decide to just break through and people would start to sell because it broke structure. It broke this zone. So people will start to sell, but they didn't wait for a retest. So what a retest would be is the market breaking the zone, broke structure, coming back up to the tip of this zone, meaning once it gets to this tip of the zone, the candle would stop forming here. But instead, you see how this long candle just shot through instead of stopping right here? That just shows you that the market really didn't retest. A candle would definitely just stop right here in this area and then drop. Instead, this candle decided to shoot through and keep going back up. So this is what you call a fake out. People will get faked out by this because they think that the market's going to sell. They got in for this long-term sell, but it ended up reversing on them. So yes, we buy and sell in supply and demand areas in little zones. Once you plot your support and resistance zones, and I feel like that's the one thing everybody should practice, is just charting up for an hour, support and resistance zones. Once you know how to do support and resistance zones, trading is so easy because all you're doing is trading in between these zones. You have your zone set, and that's what you're trading. You got in for a buy here, and you caught 259 pips. Imagine that at $1. $1 a pip, that's 257 pips. At $10, that's $2,500. Then you get here, now you're at an, and then you see, now you're at an area that's overbought. And now you want to sell. So you sell back down to that oversold area. Once you get to this oversold area, you see how all these wicks are here? That's confirmation that, okay, the market's going to get pushed up. It's going to push up all these wicks here. It's like wick, wick, wick. Same here. All these wicks here. So many wicks here telling you that the market doesn't really want to go up. If you have 3 candles that formed and the market didn't, and it was just wicky, that means the market wants to go in the other direction. The market doesn't really want to go up. It wants to come down. But yep, I would set alerts, you guys. This is my alerts, and I think that's all I pretty much wanted to say. Oh yeah, so you'd be, I wanted to show the retest example, and that was it here. So yeah, so what you're waiting for is a retest, and that's when it comes to structure. You're waiting for a retest. So like I said, this is a nice little zone here. So you're waiting for price to come to this zone. You get an alert here. So now you're like, okay, is the market going to continue down, or is the market going to revert and go back up? The way you know the market is going to continue down is if structure breaks and gives a retest at this zone. This is the retest. Retest and comes back down. Because remember, I told you if it doesn't retest, I wouldn't suggest getting in it because the market can just decide to do this. That's why I would not get in if market structure breaks. I would wait for the retest first and then get in, because the market could break structure and then go right back on to the upside. And same with this. If the market does end up coming here and then going back up, the way we know that it's going to continue going up is that if it breaks structure and retest. And that's when you would get in here for this long-term uptrend. But all in all, you guys, I hope that helped a lot. If you guys have any more questions, definitely just let me know. I'm going to post this now. And please, 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 you guys, give me feedback. I need feedback and let me know what I could have helped more on. Thank you.